Good morning and welcome to Business Buzz. Coming up, crude supply to Nigeria's local refineries raises sharply, though the country's biggest refinery disputes the regulator's account. Oil prices extend their rally as hopes of a Strait of Hormuz deal fades. Gurugu's power bond default draws scrutiny to its balance sheet, and digital asset operators press for changes to Nigeria's new tax rules. I am Louisa Asidi. Stay with us. Welcome. We begin this morning with the manufacturing sector and a major issue that has been a stronghold on the sector's growth. And now, if you run a small factory anywhere in this country, you already know that the generator often costs more than the raw materials. The amount you need for a spare part costs more than what you budgeted, and the loan you took to stay open is now the most expensive cost on your books. That livid experience is exactly what Nigerian manufacturers have been putting on record. In their latest accounting of what is holding operations back, the same culprits keep surfacing: unreliable power, foreign exchange scarcity, the crunching cost of borrowing, poor roads and logistics, and a punishing tax system. Together, they explain why so many plants are running below capacity, why unsold goods are piling up, and why some firms have quietly scaled down or moved next door to friendlier economies. The question, however, is what a manufacturer, an investor, or policymaker actually does with that picture. Which of these pressures is the one to break first? Is cheaper power the solution, or is it getting more access to loans? And is there a realistic path to operational efficiency without waiting on reforms that may be years away? To help us make sense of that, I'm joined by Lucky Enakiriri, a financial analyst and the former Dean of Student Affairs at Dennis Osadebe University here in Asaba. He brings both the numbers and the ground level view of how these constraints ripple through the real economy. So you're welcome to the program.
Thank you very much.
It's so lovely to have you in our program. You always bring light to this program.
It's my pleasure.
Okay. So, sir, from your point of view, which single constraint, when you look at power, foreign exchanges, cost of borrowing, logistics, or taxation, do you see as the most immediate drag on manufacturers' operational efficiency today?
I see all of them because we cannot single out one constraint as what is troubling the manufacturing sector in Nigeria. If you look at history, back to the 1970s, where we have a bit of manufacturing boom in Nigeria, and then you come to 1980s, where we began to have these problems, which resulted in the structural adjustment program of the Babangida regime. I discovered that the combination of these factors resulted into the problems that we have in the manufacturing sector. So I cannot single one out as the most influential. If you talk of infrastructure, it costs even less to take some goods outside Nigeria than to take some goods from here to Kaduna State because of the bottleneck that you have within the supply chain. And then you talk of the road. We don't have even good rail. The roads that we have to pass through, the difficulties of taking the products from one place to the other. And that is even the logistic issue in it. Can you isolate that and say that is the biggest problem we have? And then you now start looking at what does it cost to produce these goods? Where is the power to get these things done? It's not available. And most companies or organizations have to generate power by themselves. Some rely on generator. Now, buying of diesel at 1,700 per liter, and you have to run that. If you understand the manufacturing plant effectively, you realize that the plant is supposed to run almost 24 hours. And some of these equipment do not need power outage. So you have to consistently provide power so that you can have the equipment running smoothly and in order not to damage them. Can you isolate that and say this is the most important? And then you look at getting some of these parts, equipment from abroad, foreign exchange, which has almost done a great deal of harm to the manufacturing sector in Nigeria. Why did this company start having a serious problem, especially when you look at from 2016 till date? You discover that the foreign exchange was a big problem. Some persons who borrowed in dollars were unable, the debt automatically tripled because of the falling nature of the naira. Can you isolate that? Obviously, no. And you begin to look at the cost of borrowing in the domestic economy, the very high cost of borrowing compared to what we used to have before. And now you see, even at a point, banks were lending at interest rate of 36%. How do you sustain that? So which factor can you say that you will isolate is the biggest? Obviously, no, to my own view. Or is it the government tax policy? And I'm glad that recently the federal government have tried to harmonize the tax policy. But obviously, before now, it's been a problem. So we can't select any factor to say this is the biggest problem in Nigeria. If we have to look at this manufacturing sector effectively and begin to solve our problem, we discover that, look, we have to look at all of these factors together to solve our problem. It's holistic. It's an holistic view. And if we have to tackle it, we'll tackle the problem holistically.
Okay, so from what you were saying, no one sector, no one issue is more important than the other. All of the issues are important. You have to solve each and every one of them before you can get the manufacturing sector moving.
Working, yes.
Okay, so the Manufacturing Association of Nigeria report lists multiple impediments like unreliable power supply or high borrowing cost. Now, if you had to rank these impediments by severity for a small to medium manufacturer in Asaba or maybe the South, how would that ranking look like?
You see, you talked about cost of borrowing.
Yes.
I will put that at the higher scale.
Okay.
Because you mentioned power and then cost of borrowing. Nigerians have found a way to generate power by themselves, even though at a higher cost. Some persons have gone to generators, other solar system to ensure that they keep production ongoing. And I think the industrial line of the PHCN or BEDC, because it's unfortunate, we still call them NEPA because we are not seeing the difference between when it was NEPA and when it has now been decentralized to BEDC and all the other. The industrial line, it provides a bit of reliable power. So that's why I have to zero in on the funding, which has to do with a lot of high cost. Because so on a scale, I will put that up there. Because if we have access to funds at a very cheap rate, then we can think of mitigating this other aspect the way we have always done it. Remember, in this country, we used to have water board running before, where water flow from the centrally to our homes. And when that became moribund, Nigerians found a way to go around it. If you have your money, you provide water. And today, we have water in every home, courtesy bowl. We have to provide that. So Nigerians, if we have access to the fund at a cheaper rate, we should be able to find our way around it in the interim. But if we really want the manufacturing sector to become a big driver of the economy, we need to look at everything holistically.
Okay, now many manufacturers say they spend more on diesel and maintenance rather than on raw materials. Now, at what point does energy cost become an existential threat rather than just a marginal squeeze?
It's a serious threat, not at what point, from beginning to the point where these products are sold. Energy costs can push the cost of production up by more than 20%. The Manufacturing Association of Nigeria, of course, which you mentioned, have told us clearly, if from beginning you need power to run the machines, if you produce goods which require storage, you need power to do that. Those who work in the office, they need power to do that. So from the beginning of the chain to the end, it has become an important factor. Not even at what point, from beginning. And it adds to the cost of production. And that is why we have products in Nigeria quite very expensive compared to other places. And that also brought us to a bigger problem that we had, which killed most manufacturing companies in Nigeria. When you have this high cost, what happens is that imported goods become cheaper.
Yes.
And when that happens, the home companies are unable to compete because consumers will always go for cheaper goods. They don't care whether this one is made in Nigeria or not. They care about their pocket. Can my pocket afford this? The purchasing power that is within my hand, can it buy this? If it can buy it, if I can have these goods at a cheaper rate than this other one, why do I care whether this one was produced in Nigeria or not? That's where the problem is. So from beginning to the end of the chain, this power cost is an issue, and we must begin to look at it and to address it. Fortunately, Nigeria has all of the available resources to address this. Just that we will not have a committed government over the years. I do hope we'll start having committed government to address the power sector, because without it, we can do nothing.
Okay. So now the central bank's monetary policy rate is at 26.5%. And commercial lending rate is even higher than that. So for a factory already leveraged, what realistic options exist to refinance or restructure without triggering defaults?
We have a dilemma. That's why I told you, if I have to rank it, when you asked me to rank it, that's how we put this the up of the scale. We have a dilemma, and that is the issue of financing. Unfortunately for us, you don't go into manufacturing with small money. It's not pocket money. So you bring it out and say, okay, I want to do this today. I need to get, or you just call your friends and family, say, please, can you gather about 1 million for me? I need to start the manufacturing of this and that. No, it's capital intensive. And that's the reason you also account for employment of the larger portion of the population. Now, for central bank, placing interest rate at 26.5%, and is the base. Because when we talk of the central bank policy, it means that you cannot lend to people below this 26.5%. The commercial banks want to make profit. They are in there for business. They are not there to look at your faces. So they want to make profit. Because of that, the realistic lending rate today, which I would think should be a minimum of about 33%. For a company that is already debt-ridden, how do you restructure that? That's where the dilemma is. This is the reason many companies folded up. They have to stop operation because they can't cope with the rising cost. They can't get access to financing to be able to restructure this debt if they wanted to. How then do you even produce to make a profit that is above 33% to be able to pay off the loan and then also be able to make enough profit to sustain the business? We have a dilemma. What then is the next available option? They say we fold up. That's why many companies have left. So the government needs to start looking at this critically.
Okay, so the MAN, that's the Manufacturing Association of Nigeria, has called for incentives to boost patronage of made in Nigerian products, especially from MDAs. In your view, how enforceable or realistic is this demand? And what would it take to move it from rhetoric to policy?
Rhetoric to policy is a little bit because you have freedom to choose what you have to buy or use. So you cannot force the ordinary Nigerian to start buying made in Nigerian goods. But we have to be patriotic. If you ask me, we have to be patriotic to buy our own. But buying our own is a product of many factors. One, it has to be quality. Two, it has to be cheap. Like I mentioned earlier, if you give me a cheaper product made in Nigeria goods, I don't need to go to anywhere to buy one somewhere. But cascading this into policy would have to start with the government themselves. When you talk of let us buy made in Nigeria goods, the last administration said something that change begins with me. That means I have to begin the change. The question is, how much of the change did the last administration begin themselves? This administration says that it's going to continue from there, which means the change should continue with me. How much of it? And I will ask the question. The president of Nigeria, the government functionary, the governors, the commissioner, the ministers, the parastatals, the agencies, and all of that, how much of made in Nigeria goods do they use? We talk of cars today. We have somebody who produces, to an extent, cars in Nigeria at Enewe. How much of that is being patronized by the Nigeria government? So if you're asking me, the Nigeria citizen, to use made in Nigeria goods to patronize our economy, which is very good, that will pull us from some of the quagmire that we find ourselves. Nice. But you have to show by example. You have to tell us that, look, you started these things, follow suit. In a home, when the father makes the law, it should be the first to obey the law. When it doesn't, the children will break the law. Let the government start by patronizing much of the made in Nigeria goods. If you listen to the last economic summit organized by Delta State, the governor of Anambra State said something very striking. He said what he was wearing was clothing made in Nigeria, somewhere in Abia State, so Okute or something like that. And we cannot talk of a summit when every one of us is busy putting on foreign expensive suit. It has to begin with us. That small community, the first lady went there the other time to do some empowerment, and probably she will repeat that visit again. Now, because people are wearing it, it's giving them a source of livelihood. So these things are economic change. It would have to go from one to one. So the government should lead by example. Let them start using innocent motors. The president, the vice president, the Senate president, the speaker, every one of them, the governors, the ministers, the commissioners. Let us start with that. So we stop the importation of foreign cars. One car used by the government functionary could cost as much as 300 million, 400 million. So just imagine if we say, let us bring this policy to action, and everyone in government sector decides that we will start using made in Nigeria car. Think about it. Think about it. How much will be saved in foreign exchange in this country? Think about it. Today, Dangote refinery came on board and we started producing petrol in Nigeria. We saw the effect before this whole issue of the Strait of Hormuz and all the other came in, and petrol prices began to rise again. Now we're at 1,300. But we saw the effect. We saw what happened. Despite the fact that there is something not excellently nice about it. And that's the fact that Dangote told us at a point in time that they still have to import crude. How can we be producing crude here and we are importing? So when we say policy should be enforced or brought to reality, it should begin with the government.
It's a government. So you're trying to say that the government should first of all start as an example to encourage fellow Nigerians to actually start using made in Nigeria
goods.
That would actually be a very beautiful thing if something like that actually happens. So some manufacturers are quietly relocating production to neighboring countries with more stable power
supply.
And cheaper credit. Now, how serious is this trend and what does it signal about Nigeria's industrial competitiveness?
The trend is over serious. In the Nigerian language, wahala dey. Because as a businessman, your first thinking is survival, profitability. So anything that will give you more profit is good. Anything that will make you to survive is excellent. That's why the companies are relocating to other neighboring countries that can guarantee them power supply and guarantee them cheaper credit. I think within the sub-Saharan Africa, Nigeria has the highest rate of interest at a minimum of 26.5%. So if I can be somewhere and I can borrow at a single digit, why do you think I should come to you and borrow from you at double digit? It will help me. What that means is this. Look, by practical example, if you are looking for 1 million naira, at 20% is 200,000, which means at 30% you have 300,000 or so, which means your cost of production will be 1,300,000 naira. But if you see that borrowing at 5%, you have 50,000. 1,050,000 naira. Obviously, that will affect the cost of the product. The product in a cheaper credit country will be more cheaper than the one in that 30%. So businessmen will look for somewhere they can get their credit cheaper and then have steady power supply where they don't have to rely on diesel or buy expensive diesel or petrol to power their plants. So the trend is very serious, extremely very serious. Can it be reversed? Yes. If we decide to be serious with our economy.
Okay. So if you were advising a small factory owner in Asaba today, what 3 operational adjustments would you recommend to improve efficiency without waiting for government reforms?
To recommend, like I said before, manufacturing has to do with bulk of money.
Yes.
It's not a little money. But you see, there are factors that are within your control and there are factors that are outside your control. Of course, we've seen that when we talk of the credit in the economy, it's outside the control of the manufacturers. And when we talk of the power, it's outside the control of the manufacturer, although we can provide an alternative by going somehow on probably solar energy or using generator. Of course, we know there are some equipment these days that are a little bit solar friendly. So the number one thing I would tell and recommend to a manufacturer is to look inward and cut costs. That will affect people, I know, but it will keep them in business. You look at your cost of production, those ones that can be cut, you cut it. So you can bring it down and help yourself. Number 2 is to look at sustainable equipment. It might be a little bit expensive to purchase at the beginning, but in the long run, it will be cheaper to maintain. And when we talk of sustainable equipment, we're talking of equipment that are friendly to power. And even if you have to rely on your alternate power supply, you'll be looking at less consumption. And then number 3, I will ask those manufacturing companies to build partnership. Because one of the problems we have about manufacturing in Nigeria, I think last year we have about 2.4 or 2.2 trillion worth of goods inventory unsold. So you build partnership to be able to market your goods and put them in the market so that as they're coming out, they're sold off. Okay. Because a quick turnover will make more money than higher cost.
And higher cost, yes. So they should try to bring down the cost of production. And then when they sell out, they have a quicker turnover, which will in turn bring in more profit to their business. That's a very wonderful idea. Now, finally, looking beyond the immediate pain points, what gives you the confidence or concern about the medium-term trajectory of Nigeria's manufacturing sector?
Confidence, concern. My confidence is this, that Nigeria is a huge market. I'll tell you, we are a country of 220 million people. Estimated, we don't even know if we are more than that. Because you see at Redemption Camp recently, more than millions of people gathered there, just in Lagos alone. And nobody knew whether people actually left the various states. That's to tell you the large population of Nigeria. That's my confidence, because any company in Nigeria can survive. We have the market. We have the market. And the company in Nigeria can be highly profitable if we learn to take advantage of our population. And especially the government learns to know that, look, Nigeria is a big hub, it's a big market. Even around neighboring African country. So that's my number one confidence, the people. A product is only as good when you have the demand or the market for it. And Nigeria has the market for it. 220 million people, that is no joke. But you see, my biggest frustration is the factors that we listed before. We talk of the impediment to manufacturing, the power. We talk of policies.
Borrowing costs, FX rates.
And then that's part of the policies anyway. Interest rate, FS. And then we talk about infrastructure. Those are my biggest challenge and concern in Nigeria. How quickly are we able to fix this? How do we make use of our rivers, the waterway, to generate power to solve this problem? How do we fix our road to ensure that we move smoothly? How do we fix our policy problem so that we will not begin to think that interest rate must be very high for inflation to come down? It's a big challenge that we need to begin to look at. Those are my biggest concern in Nigeria. And I do hope we'll take steps to address some of these concerns so that Nigeria can begin to. Then the FS problem. We floated our currency. It's good that we float our currency, but the economy behind it has to be studied quite well. You float currency, you can even devalue your currency when you are a manufacturing hub and you want to make your goods cheaper for other countries. We are import dependent and we float our currency, so it's going up. The raw material, some of the raw material for manufacturing, they are brought from abroad, sometimes up to 70%. And the naira keeps going up. It's a big concern. So if we look at some of these things, we should be able to solve our problem. But these are my biggest concern as far as manufacturing is concerned in Nigeria. When you have the infrastructure, the power, the policy. But if we fix them, we'll be okay.
Okay, so once all those things are fixed, the manufacturing sector in Nigeria will have a great boost.
Nigerians are very industrious people. Nigerians are very industrial people. We come up with idea at any time. I can look at this place right now and come up with business idea. If it is possible for us to even sell people and retrieve them, Nigerians would have done that. We're very industrious people. That's why we say that, look, the duty of government is provide the enabling environment. What is the enabling environment? This is what we've mentioned already. If we have that, be rest assured that Nigerian manufacturing industries will peak. And let me say something very quickly. And that has to do with the liberalization of the economy, anything can be imported in. No person on earth wants to have full control of his household and then allow just anybody to come in. Maybe we need to talk more about that in the future.
Okay.
Where you have people can bring in goods from anywhere at any time, how will your local industry compete, especially when those goods are cheaper? That was a major problem with the structural adjustment program of 1986. And which closed as about textile mill by 1997. Because foreign fabrics were coming in and they were cheaper. People wanted to buy the cheaper one. You want to wear clothes, you want to clothe your children.
Yes, yes, yes. Okay, thank you, Mr. Dr. Lucky Enakiriri. It has always been wonderful having you here with us, and I love your insights in the Nigerian's manufacturing sector. Thank you so much.
You're welcome.
Okay, so we'll go on a short break now. When we return, more Business Buzz.
The Delta Broadcast Media Organization, in conjunction with the Delta State Ministry of Information, presents the Delta Broadcast Media Conference 2.0. Theme: The Broadcast Media as a Democratic Catalyst, Shaping Public Trust and Electoral Credibility in 2027. Keynote speaker, Sheon Okimbaloye. Anchor, Politics Today on Channels Television. Guest speakers, Ayo Mairo Essay. Anchor, Arise News. Agatha Amata, CEO, Trend FM. Samuel Fejoku, veteran broadcaster and senior special assistant to the governor on protocol. Guest of honor, Honorable Charles Ehiedu Aneagu, Commissioner for Works, Rural Roads and Public Information. And Right Honorable Imomotimi Dennis Guo. Speaker, Delta State House of Assembly. Special guest of honor, His Excellency, Right Honorable Elder Sheriff F.O. Oborewori, the Executive Governor of Delta State. Convener, media personality, Ruki Onoro. Date, August 14, 2026. Time, 10 a.m. Venue, Unity Hall, Government House, Asaba. There'll be high-level networking, media interaction, capacity building, awards, and lots more. Register to attend on www.deltabroadcastmediaconference.org. For inquiries, call 0706-701-8400, 0803-874-9265. Delta Broadcast Media Conference 2.0, powered by Delta State Government. Sponsors, Dominion Pearl Homes and One Niger app. Supported by NTA, DBS, Quest FM and TV, Warri Sentinel, Trend FM, Mega FM, Baramatu Voice, Boko FM, Crown FM, Sleek FM, Eku FM, Big Heart Radio, Cruise FM, Atlantic TV, Rise FM, and Dott TV.
Welcome back. Now on to the markets where the Nigerian exchange was softer in Tuesday's session. The all share index was down 1,736 points so far, a decline of 0.7% at 246,793 points. Market capitalization shed 1.12 trillion naira to 159.3 trillion naira. Market breadth was negative, with 25 stocks advancing, 30 declining, and 7 unchanged so far. UPD Secret led the gainers, rising 10% to 14 naira 85 kobo, followed by FTN Cocoa and CNI Listen. Meanwhile, Thomas Worth paces the losers, falling close to 10% to 2 naira 89 kobo. Time now for the markets, as world shares were mixed on Tuesday, with Europe firmer, Asia uneven, and oil giving back part of its recent surge. Let's start in Europe, where the major indices are higher in early trading. Germany's DAX was up 0.4% at 26,435 points. The CAC 40 in Paris added 0.2% at 8,741 points. And in London, the FTSE 100 was up 0.2% at 10,883 points. Over in Asia, the session was uneven. In Tokyo, the Nikkei 225 held at 66,917 points, the record level set in Monday's 2% surge. South Korea's Kospi added 0.7% to 6,345 points. Hong Kong's Hang Seng fell 1.1% to 25,652 points, and the Shanghai Composite lost 0.8% to 3,934 points. In Australia, the S&P ASX 200 edged up 0.2% to 9,250 points. The Sensex in India slipped 0.5% to 78,154 points. Now turning to Africa, where the latest closes showed a mixed picture across the continent's major exchanges. In South Africa, the Johannesburg All Share stood at 116,989 points, down 0.8% at its most recent close, while Egypt's EGX 30 in Cairo was at 53,627 points, off 0.2%. Morocco's MASI index in Casablanca was at 17,739 points, down 0.3%. In Ghana, the composite index was at 15,225 points, up 0.1%. Kenya's Nairobi's All Share was at 235 points, up 0.4%. Meanwhile, Zimbabwe's All Share remained the standout as it was up more than 6% at 330 points. Now to energy and commodities, where oil is giving back part of Monday's surge. Prices remain elevated on the stand-up over the Strait of Hormuz after Washington signaled it would seek compensation from Iran as part of any settlement. Brent crude is down 1% at $86.81 a barrel. United States benchmark crude has lost 1% at $81.30. Gold is up 0.7% at $4,451 an ounce, while natural gas is flat at $2.79. Now back on Wall Street, where the session is mildly positive at midday. The S&P 500 is a little changed at 7,755 points. The Dow Industrials are up 0.4% at 54,179 points, while the Nasdaq Composite is up 0.2% at 26,551 points. Investors are holding position ahead of this week's consumer price data, as July's inflation is forecast to have risen at a 3.4% rate, isn't slightly from 3.5% in June. And finally, on the currency markets, the dollar is steady at 159.23 Japanese yen, while the euro is little changed at $1.1547. Let's take a quick break, the upstream sector, when we return. Welcome back. Now to the upstream sector, where crude deliveries to Nigeria's local refineries have risen sharply. The Nigerian Upstream Petroleum Regulatory Commission says local refiners received 53.7 million barrels of crude oil and condensate between April and June. That represents 97.4% of the volume allocated to producers for domestic use. It compares with 28.5 million barrels in the first quarter, an increase of about 88%. The The Commission attributes the improvement to higher domestic output and to long-term supply agreements backed by bankable sales and purchase contracts. However, the figures have produced a disagreement. The Commission says producers offered the Dangote refinery 68.1 million barrels against a slated requirement of 63 million. It says the refinery accepted 52.6 million barrels, or 78% of what was offered. The refinery has asked the regulator to produce the underlying statistics before it responds. Its spokesman, Anthony Chiegina, said the company would compare the figures once they are provided. The exchange matters because the domestic supply obligation rests on a willing buyer, willing seller basis, and allocation alone does not guarantee delivery. Now staying with energy, where crude prices are climbing again. Brent crude rose 1.3% to $88.85 a barrel in Tuesday's morning trading. United States benchmark crude gained 1.5% to $83.37. Both contracts jumped around 5% on Monday, and crude has risen about 10% over the past week. The move follows fading expectations of an agreement on reopening the Strait of Hormuz after President Donald Trump said he would seek conflict compensation from Iran as part of any settlements. For Nigeria, higher crude prices lift export earnings, but they also raise the cost of imported inputs across the economy. Now to precious metals, where gold has reached a new local high. Dealers put the retail price of pure gold in Nigeria at approximately 220,000 naira a gram, including markup. Internationally, the metal is trading above $4,400 an ounce in London. Traders are positioning ahead of United States consumer price data due this week, which will shape expectations for interest rates. Nigerian buyers have increasingly turned to physical gold as a hedge against domestic price pressure. Let's take a quick break, corporate debt, and the power sector when we return. Welcome back. Now to corporate debt, where Gregu Power's mixed bond payment is drawing analysts into its accounts. A review of the company's half-year filings shows it had 45.47 billion naira of debt falling due within 12 months as of June. Total increased bearing debt stood at 66.1 billion naira against shareholders' equity of 38.6 billion. Trade and other payables total 96.4 billion naira, with gas suppliers alone accounting for 80.3 billion. Receivables stood at 106.9 billion naira, more than 69 billion of it aged beyond 6 months. The research firm ProShare has called for fuller disclosure, including a half-year cash flow statement and a recovery plan. Still on power, there's better news for the generation companies. Data from the electricity regulator shows domestic bilateral customer paid 5.82 billion naira against 6.12 billion billed in the first quarter. That is a remittance rate of 95%, up from just over 84% in the previous quarter. Bilateral contracts allow generation companies to sell directly to eligible buyers and collect payment outside the main wholesale market. With the sector carrying an estimated 6 trillion naira in unpaid invoices, these direct arrangements are becoming a critical source of cash. Now to public finances, where 3 jurisdictions account for the bulk of state borrowing. The Debt Management Office says Lagos, the Federal Capital Territory, and Rivers State together hold 1.96 trillion naira in domestic debt. That is more than 43% of the 4.52 trillion naira owed by all 36 states and the Federal Capital Territory. Lagos alone accounts for 1.21 trillion naira, while at the other end, Jigawa carries the smallest stock at 1.6 billion naira. The combined total rose by about 3.7% between December and March. Meanwhile, the Finance Ministry has intervened in a dispute over insurance recapitalization charges. It has directed the National Insurance Commission to suspend enforcement of contested fees against two state-owned firms, Nikon Insurance and the Nigerian Reinsurance Corporation. The assessments amount to 305 million naira and 375 million naira respectively. The companies also challenged a directive to place their entire capital injection in an escrow account at the central bank. The suspension holds pending the regulator's legal justification, and the wider industry now awaits clarity on how the new capital regime will be applied. Time for another break. Currency, tax, and the energy transaction still ahead. Welcome back. Now to the economy, where the head of the Nigerian Revenue Service says the currency reforms have stabilized it. Zach Adedeji said in a weekend broadcast interview that unifying the exchange rate windows removed distortions that had made transaction values difficult to determine. He said domestic refining capacity has risen from about 30,000 barrels a day before the reforms to roughly 700,000. He also said government revenue has grown from around 12 trillion naira to 40 trillion. However, those are his own figures presented in defense of the reform program. He acknowledged the hardship of the adjustment, but said the focus now is on consolidating the gains. Meanwhile, digital asset operators are pressing for changes to the new tax rules. The Digital Assets Coalition says the framework, which took effect on the 3rd of August, taxes transactions rather than profits. It objects to 1.5% stamp duty on conversions between Naira and digital assets, and to a 1% withholding tax on gross sale values. The group spokesman, Obina Iwano, described the charges as a toll on participation rather than a tax on profits. It cites India, Kenya, and Turkey as markets that adjusted or withdrew similar transaction levies. The coalition supports taxation in principle, but wants collection in Naira and exemptions for small users. One more break: solar, livestock, and aviation when we return. Welcome back. Now to renewable energy, where Nigeria faces a difficult choice over solar supply. Nearly all solar panels and accessories used in the country are imported, in a market where roughly 87 million people lack access to electricity. The presidency wants Nigeria to become a producer and exporter of clean energy technology rather than a consumer. However, David Turegwa of the Global Initiative of Food Security and Environmental Protection warns against restricting imports before local manufacturing exists. Researchers say Nigeria attracted close to $100 billion in energy investment over the past decade, while about 92% went to oil and gas. The country has roughly 14 gigawatts of installed capacity, of which only about 5 reaches the grid reliably. Now to agriculture, where the government has set an ambitious target for the livestock sector. President Bola Tinubu says Nigeria aims to more than double the sector's estimated $32 billion annual contribution to the economy. He was represented at the All Africa Conference on Animal Agriculture in Abuja by the Secretary to the Government of the Federation, George Akume. Nigeria holds more than 58 million cattle, 64 million sheep, and 124 million goats. The strategy focuses on ranching, animal health, feed production, and improved genetics, alongside efforts to reduce dependency on imported dairy. And finally, to aviation, where stakeholders are divided over how ticket sales charges should be shared. Retired Group Captain John Ejikutu argues the Airspace Management Agency's share should rise from 23% to 40%. He says navigation and radar equipment cannot be operated beyond its maintenance and calibration limits. But the former rector of the Nigerian College of Aviation Technology, Sam Corrick, says operating costs alone do not justify more funding. He argues that weak upper airspace communications have pushed airlines onto alternative routes, costing the agency overflight income. His prescription is to fix the infrastructure first, recover the lost traffic, and then reassess the funding needed. That's all we have for you today on Business Buzz. I am Louisa Asidi. Thank you for joining us.